Hello everyone. Good evening. Good evening everyone. So if you're live, so try to confirm me once about audio and video quality so that we can start this session. Hi everyone. Good evening. Good evening everyone. Okay, so everything is okay, then let's start this session. So welcome to JAIIB CAIIB English Medium. My name is CA Aarti and I hope you all are doing good. So basically now we are focusing and preparing for your ABFM December 25. Now in this session we will be covering your module A and B. So both the aspects I will cover, whether theory and numerical, both the things. So for numerical, you need to use your calculator. So make sure that you are having your calculator right now. You need to use one paper so that you can solve it if any lengthy numericals are there. Okay, so let's start this session. Good evening everyone. So starting with the very first question. That is, according to the pyramid, which of the following is the highest level of need? In this, you need to tell me which is the highest level of your pyramid. And this question is based on your Maslow's law of hierarchy. Option A, that is safety and security. Then B, love and belonging. C, self-esteem. D, actualization. So if you see Maslow's law of hierarchy, in that there is one pyramid, yes, and starts with a very basic need, which is your sociological need, in which you are talking about your food, shelter, air. So these things are covered in this. After that you have safety needs, yes. After this you have then love and belonging, then you have your self-esteem, and then self-actualization. So highest need is your self-actualization, in which you are prioritizing yourself. So which is the highest level? Safety and security, no. Love and belonging, in which we are talking about your family, friends, yes. So this is what covered under your love and belonging. Safety and security, like about your medical, about your life. So these things are covered. Self-esteem means when you are motivated, yes, when you want to achieve, when you want, you can say respect from your society. So that is what covered under self-esteem. And correct answer is yes, that is self-actualization. So correct answer is answer D, correct. Now coming to your next question. When a bank defines its clientele scope, it should consider A, all its current retail banking customers as they represent the largest segment. B, its primary target segments now and in the future, while also explicitly identifying customer groups that are strategically outside its service offering. C, all potential individuals and businesses, irrespective of their financial needs or geographical location. D, customers who have consistently used the bank services for more than 5 years. Now this question is from your strategy. Yes, now in strategy, you have different terms, like you have vision, mission, clientele, resources. So in that, clientele is when you are focusing towards your customer, yes, which customer group you are focusing, what type of customers you want in your business. So that is what covered under clientele, yes, about your customers who are today and who will be in your future. So only its current retail customers they are talking as they are representing the largest segment. No, we are just not talking about your present, we are also including about future target from your customers. Then primary target segments now and in the future, yes. So we are talking about your present as well as about the future. Which type of customers we want, yes, that is what. Then while also explicitly identifying customer groups that are strategically outside its service offering. Then C, all potential individuals, businesses, irrespective of their financial. No, we are not talking about only individuals or businesses. We will try to cover as many as customers we can. Customers who have consistently used the bank services, no. So correct answer is going to be your answer B. We are trying to focus on the customers who are present and who we want in future. So the correct answer is answer B. Okay. Now, next question. Which of the following is not a commonly used tool for conducting an internal environmental analysis of an organization? Now, this topic is from your planning. When you are planning about your business, like what goals you want to achieve, in that you need to do environmental analysis. Yes, you need to evaluate about your environment. You need to focus about your internal environment, external environment. So in that, when you're talking about internal environment, yes, about internal environment, that what is going on in your business. In that you have three things: SWOT analysis, strategy evaluation, and gap analysis. There is no such term known as forecasting. Yes, and in this they are asking about not commonly a part of your internal environment. Now, if you see SWOT analysis, that talks about your strength, your weaknesses, opportunities, and threats. As a business, what are your strengths? Like your management is your superpower, your product is your superpower, your marketing team is your superpower. That is about strength. And what are your weaknesses? You are very bad in customer relation management. Yes, so that is your weakness. Now, opportunities means what new things you can start. That is what covered under opportunities. Yes, so like Reliance entered into telecommunication. So that was opportunity. Threats from competitors. Like for Reliance, we have Tata. For Tata, we have Adani. So these are things are covered under threats. So this is also included in your internal environment. Then strategy evaluation. Whatever strategy you have prepared, after identifying your environment. Suppose you have identified that you want to start telecommunication business. So directly you will not enter in that business. Now, first you will identify. Then you will make some steps like this steps we will take, and this is how we will launch this product. What Reliance did. Correct. So that is what strategy evaluation. Then comparing whatever they have planned and whatever they have implemented. So that after that they are doing this evaluation work. Then they have gap analysis. Gap analysis means about your planning, whatever you have planned, you are comparing with your actual. And in between, if you find any gaps, then you will understand why. In this, you will understand the reasons and you will try to correct it. So that is what gap analysis. Suppose you got target for 1 lakh, but you have achieved only 80,000. So gap is equal to 20,000. Now, what were the reasons that you couldn't achieve? You will write here, and then you will take the corrective actions so that you won't be repeating in future. Correct. So as per this, which is odd one out, that is your forecasting. Answer is your answer C. Now, coming to next question. Which financial metric calculates the portion of a company's profit allocated to each outstanding share of common stock, serving as an absolute amount per share rather than a direct return rate on total investment? You have options: A, net profit margin; B, return on equity; C, earning per share; D, earning before interest. Now, as per this, you need to tell which is the metrics you will use for the distribution of company's profit. Yes, means suppose here your company is A, B, C company. They earn profit, let's say 1 lakh rupees. Okay, this is the profit they have earned. Now, what they're saying that whatever company's portion you have calculated, you will allocate to each outstanding share. Now, what we are doing, we are going to divide with number of shares, number of outstanding shares, and serving as an absolute amount per share. So, suppose let's say you have total outstanding shares, that is 10,000. So, this will give you what? This will give you, let's say, 10 rupees. है ना? So this 10 rupees denotes what? This is what they're asking. This 10 rupees is your earning per share. Okay, so this is your earning per share. Correct answer is your answer C. So this is from your module B. Okay, now coming to next question. This is not your net profit margin. This is not return on equity. This is not earning before interest. Next question. A procedure that involves the management and the employees working together to jointly establish, record, and then monitor the goals for a particular period of time is defined as what? Now they are saying, they are giving one definition. Okay, now this definition tells you that there is a procedure in which management is doing what? Management is involving in management plus employees. Whoever is sitting in your top level management now, they are doing what? They are involving their management and their employees. They are doing this. They are involving both the sides. Okay, management also and employees who are working together, and to jointly establish, record, and then monitor the goals. Now what they are doing together, they both are coming together and they are talking about goals. They are talking about goals, like what to be achieved in your next 6 months, okay, what to be achieved in your 1 year. So this is the combination of what? MBO, total quality management, performance appraisal system, or strategic planning process. Now if you see total quality management, in this they are telling to provide best quality of products. Yes, so this is what TQM, but here they are not talking about any quality, any products. So this is odd one out. Performance appraisal means like your manager gave you one target. Okay, suppose a manager gave you target to open 1,000 saving accounts. Yes, after 1 month, when your manager again rechecked your performance, that person saw that you opened only 900, let's say, saving account in your bank. So as per this, whether you are eligible for any, you can say, appraisal or not, that is your performance appraisal system. Okay, so these terms are given in your book. This is not any term in strategic planning process. This is just a random term. So correct answer is management by objective. Now this was also asked in your PYQ. So make sure you are revising this MBO from your unit 2. Correct. Chali. So this is about your answer A. Next. Okay. So next we have a numerical question. Now as per numerical question, A Limited is considering a project with an initial investment of 3 lakhs and a lifespan of 3 years. Now there is one company, they are saying that's considering one project. Suppose Reliance is looking for Jio. Okay, so they are considering one project named as Jio, and for the Jio they want how much initial investment? That is 3 lakhs. Because when you start any business now, you require funds. Yes, so that is what initial investment of 3 lakhs and a lifespan of 3 years. Now the project's profit before depreciation for each year is 1,50,000. And what is the ARR for year 1 of the project? Now in this you need to calculate ARR, that is accounting rate of return. So are you aware about this formula, how to calculate ARR? Yes, can you calculate this? Because when we talk about ARR, this is your non-discounted methods. Now, in which module we cover this topic? In your module B. Now, in your module B, when you talk about corporate valuation, or you can say capital budgeting, in that we have this topic in which you divide your capital budgeting calculations in 2 parts. Yes, first is your, you can say that is discounted cash flows, And next you have non-discounted cash flows. Yes, now in this discounted cash flows, you will use time value of money. This is what you require to use here, but here no time value of money is required. Okay, now in this DCF, you will use like NPV. Okay, then you can say here IRR. Then your discounted payback period method. Yes, so these are some methods. We have more methods. We will cover that thing in our class, but I'm just giving you one reference that under discounted cash flow, you have these methods. Now, under non-DCF, you have only two methods, that is payback period method and ARR method. Now, how to calculate this? Can you solve this? Can you solve this one, in which you need to calculate your ARR with the given data? See, in case of numericals, if you are just sitting and watching, you cannot solve an exam. Hana, you need to practice before entering your exam hall. You need to practice it. Then only you can solve it. So, what we need to do now? Here first, let's write about your initial investment. So, your investment is equal to rupees 3 lakh. You will use 3 lakh and you will establish it. Then you have life, that is 3 years. Yes, and the project profit, what they're saying that you will earn profit before depreciation, that is going to be 1,50,000. These things are given to you. Now, as per your ARR formula, you need to take here your net income. Yes, and this is divided by your whatever you have earned. See, based on annual basis. Annual basis means your annual investment you need to take here. In your ARR, you have 3 methods. In that, they are telling you to use your annual basis. Correct. Now, how to calculate this net income here? So, for calculation of net income, let me erase this part now. You will be taking your profit before depreciation, that is 1,50,000. Now in that you need to subtract your depreciation. Now how to calculate your depreciation? If you know your basic SLM method, that is used here. So 3 lakhs divided by 3. So your depreciation per year is your 1 lakh. Okay. So 1 lakh you need to deduct here. This is your 50,000 and this is your profit and this is also your net income. Yes, this is your net income which you need to consider here. So net income, that is your 50,000. And here annual investment you will be taking beginning. Beginning means starting. So what is your initial investment? That is 3 lakhs. So this is divided by 3 lakhs. And always remember, when you are calculating rate, you need to multiply with 100. So what we are calculating, what we are understanding with ARR, we are understanding that whatever you are setting your projects, how much return, how much profit it will give you. Yes, so this is your ARR, net income divided by annual investment. Means if you run this project for 1 year, how much profit you will generate. So this is your 50,000 divided by 3 lakhs into 100. So first year you are generating 16.67%. Yes, and as you can see in November 23, they asked so many questions based on your ARR. So this is one method through which you can calculate. Yes, so this is the numerical question, and from module B they can ask any numerical question, and you need to practice this. Please, Anna, if you are watching this, whether live, whether recording, please practice this thing. Okay. Now, coming to next question. According to the statement, the ability for anyone to buy or subscribe to any number of equity shares is primarily governed by which of the following? Now, in this question, they are saying, if you are giving your shares through IPO, okay, so how many shares to buy or to subscribe, any number of shares, this is given under which particular document? In your BRPL, you must have read about MOA, AOA. This belongs to your companies, yes? So this is given in your Companies Act of the respective country, or Memorandum of Association of the company, Articles of Association of the company, or D, both B and C. So particularly when you are talking about how many number of shares you can opt for it, or how many number of shares you can subscribe to it, that is given under your AOA, that is Articles of Association. So anyone can buy or subscribe to any number of equity shares subject to the terms and conditions prescribed in the AOA of the company. Now here, all subscribers to the equity shares are governed by the common documents called your Memorandum of an Association and Articles of Association. So these are the two things. In Memorandum of Association, you will get overview of your company. Yes, in AOA, you will understand about their in-depth of that company. So in this, your correct answer is answer C. Yes, and this is the paragraph from which this question was asked. Now, coming to next question. The Reserve Bank of India, that is RBI, is response to a government initiative to boost financial inclusion, mandates that all commercial banks must open a specific number of new branches in rural areas within the next 2 years. Now, this mandate that the underlying government initiative primarily represent what? A, both are purely economic factors impacting market competition. B, the government initiative is a political factor, while the RBI's mandate is a legal factor. The government initiative is a legal factor and RBI's mandate is a political factor. Both are purely operational factors for the banks. Now, if you read this question very carefully, this question is based on your pastel analysis. I hope you can identify that this question is related to your pastel analysis. Now, pastel analysis means what? This P means your political, E means your economic, S means your social, T means your technology, L means your legal, and E means your environment. Yes, so this is a full form of your pastel. Now, as per pastel analysis, you can understand what are the factors are actually affecting your business. Okay, like political policies, government, their new government, previous government, all these things affect your business because of their schemes, because of their new type of inventions, rules, regulations which governments are framing. That is covered under your political factor. Then economic factor like inflation, yes, then GDP, about unemployment, employment, all these things are covered under this economic factor. Then under S, this is your social factor. Social factor means when companies are starting their business, they need to consider their customers, their you can say religion, their behavior. So when you're understanding them about their language, about their festivals, and as per that you are planning. then of course customers or public will support you. So that is what considered under social factor. Then T means technological factor. Technology like AI, how you are using it. Like in your bank, earlier you used to do manually all the work. Now you are doing with your computers. Now you are using AI. Yes, so this is what technology you are implementing in your business. Then L means legal. Like whatever regulatory bodies are making, like income tax, you have then GST, you have whatever RBIs are making. So that is what covered under legal factors. Yes. Then you have environment. So environment, when companies are starting their business, they are using resources from environment. So in return, they need to provide some benefit. They need to give some benefit to their environment, whether doing plantation, whether providing CSR activities, whatever they are doing. So this is what environmental. Like in your module D, you have a topic which is green and sustainable business. So green and sustainable business means nowadays companies are promoting to use environmental friendly products. So that is what covered under environment. So as per this, which is the correct option? Can you identify this? Both are purely economic factors or impacting market competition. See, they are talking about RBI. Okay, so RBI in response to government initiative to boost financial inclusion mandates that all commercial banks must open specific number of branches. Here is your government. Okay, now government has launched one new scheme. Because of that scheme, RBI gave one you can say rules to the new banks to open new branches. Okay, in rural areas. Now within the 2 years. Okay, so this mandate and underlying government initiative primarily represent what? Here is your government and here is your RBI. Now both the things belongs to your economic factors? No. They are not talking about GDP, inflation, employment, unemployment. So this is not your economic factor. This will not impact any market competition. Both are purely operational factors for the banks? No. We are not talking about any operational factors. Now you have only B or C. Government is a legal factor. RBI is a political factor. Now when you talk about government, that is legal? No. That is political. So this is wrong. And RBI's mandate is a political factor? No. RBI is giving you legal responsibilities. Yes, legal factor. So correct answer is your answer B. The government initiative is a political factor while the RBI's mandate is a legal factor. Okay, so this is how you need to solve in your exam because these type of pattern they are asking in your exam. So correct answer is answer B. Next, how is the profitability index calculated? Now, what is the formula for your profitability index? Can you recall that formula? Yes. See, when we talk about profitability index, we are talking about your time value of money. And this is covered under time value of money. So this question is based on your formula and they are not giving you any formula here. They are giving that formula in theory part. Okay. So A, by subtracting the initial investment amount from the present value of future cash flows, or B, by dividing the present value of future expected cash flows by the initial investment amount. C, by multiplying the initial investment amount by the internal rate of return, that is IRR, or by dividing the total cash flows by the total outflows. So which is the correct answer? Correct answer is you're subtracting them? No, we are not subtracting anything. Are you multiplying anything? No. In that formula, we are not multiplying anything. The correct answer is going to be either B or D, in which we are dividing. Now dividing what? direct total cash inflows with the total outflows, or you are calculating present value of future expected cash flows by the initial amount invested. So correct answer is going to be your answer B, because as I said you need to use time value of money. Now what is the time value of money? See, suppose if you are starting any business today, today you are doing expenditure, but because of this expenditure you will earn so many benefits in future. Of course, yes, you will earn. Now you cannot calculate directly that value. Suppose if today you are starting, this is a 0th period, let's say this is a 2025. Today you are giving 2 lakhs for starting that project. Okay. Now in 26, from this 2 lakhs, because of that business, you will earn 20,000. In 27, you will earn, let's say, 50,000. In 28, let's say you will be earning 60,000. In 29, you will be earning, let's say, 70,000. Now, as per your time value of money, you cannot just add all these figures directly. Then what we need to do? We need to calculate their today's value. Yes, we need to calculate today's value. And how to calculate today's value? By using your time value of money. You will be doing discounting of these terms. Okay, you will be discounting this cash flows and you will be calculating today's value. So what we will be doing? We will be taking present value of future expected cash flows. Always remember, when present value is there, you are going to use time value of money by the initial investment amount. Means that is going to be your 2 lakhs. So correct answer is going to be your answer B. Yes, chaliye. Now coming to next question. A public sector bank is conducting a strategic review. Now during this process, they identified 2 key points. First, rising interest rates in the market are making it more expensive for the bank to raise funds. Second, the bank has a highly experienced and stable workforce with strong customer relationships spanning decades. Now, in the context of SWOT analysis for this bank, how would this 2 points typically be classified? Point 1 means this point threat, point 2 means this point weakness. Second option, point 1 opportunity, point 2 that is your threat. Third option, threat, okay, and point 2 strength. Fourth option, weakness and opportunity. Yes. So, as per this, which is going to be your correct answer here? Now again you need to use a SWOT analysis. Now SWOT analysis means what? When you are taking strength, means in your business, what is the best thing about your business? Then about weaknesses, in which area you are lacking. Opportunity means what are the new things in which you can enter, like right now electronic vehicle is the new opportunity for the businesses. Then T, threats from the businesses. Now, rising interest rates in the market are making it more expensive for the bank to raise funds. So what they're saying, because of rise in interest in the market, yes, now it is becoming difficult to get more funds. So this is going to be what? This is going to be internal or external. See, SW and OT. SW is your internal factor, because of your own working you are facing this problem or you are enjoying that strength part. This O and T is because of external factors. So in this first point, rising interest rate, that is in the control of bank? No, that is not in the control of bank. Yes, so this is going to be your external factor. So external includes opportunity or threat. So this is going to be what? This is going to be your threat, because this is a problem. So problem cannot be your opportunity. Yes, so you can eliminate point B and D. Then second, the bank has a highly experienced and stable workforce with strong customer relationships spanning decades. Now next, what they are telling, they are saying that in your business, in your bank, you have highly experienced employees, and because of this stable workforce, you have strong customer relationship for more than 10 years. So this is what? This is within your organization point? Yes. So you will see S or W. strength or weakness. S, W, these two things talks about internal thing. Okay, and O and T, these two things talks about external thing. Yes, so now in your this second point, they're talking about some positive things, good things about your business. So that is your strength. So correct answer is going to be answer C, not A. Answer is your first point threat, second point strength. Okay. So these type of questions they will be asking in your exam, everyone. So please practice this and let's solve now next question. A firm's details are as under. Sales 100 per unit, rupees 30 lakhs, variable cost 50%, fixed cost 10 lakhs, and it has borrowed rupees 8 lakh at the rate 10% per annum, and its equity share capital is rupees 10 lakhs, 100 each. And consider tax rate 35%, calculate its degree of financial leverage and earning per share. Now in this question, you need to calculate two things. First is about degree of financial leverage, and second, you need to calculate that is earning per share. Okay. So now if you talk about degree of financial leverage, means you're going to use your debt amount. As per this financial leverage means, financial means what? Financial means your funds. So how you can generate your funds? You have basically two sides. You can issue your equity or you can take debt. And debt means what? Debt means borrowing. Yes? So now as per financial leverage, they are saying you will not change your equity. You are not changing your equity. You are only going to use your debt part. You are going to use your borrowing part. So how this borrowing, if increases, will benefit? Okay, in our regular classes, we compare with all these three different aspects. But right now we don't have much time, so I'm not going to discuss about each and every scenario, like if you have only equity, if you have only debt, if you have both the combinations. So now we will be solving only related to your debt side. Now how to calculate it? See, in your JAIIB, you used to calculate na EBIT. If you know that formula, this question is going to be very easy. So first you need to start with sale. Okay. So sales is given, that is 30 lakhs. Now if you subtract variable cost, that is 50%. So 30 lakhs 15%, that is 15 lakhs. So your contribution is equal to 15 lakhs. Yes. Now from this contribution, you will subtract your fixed cost. And that is given 10 lakhs. I hope you remember what is variable and fixed cost. Variable cost changes with volume of production. Yes, if you are increasing your production, decrease your production, this variable cost will change. But fixed cost will not change with volume of production. It is going to be constant throughout the period. For example, you are paying insurance. That is what? That is your fixed cost. If you are purchasing raw material, that is your variable cost. Correct? So now, after this you will get EBIT. Now what is EBIT? EBIT means earning before interest and taxes. Means from your operations, how much you are generating before giving taxes to the government, before giving any loan amount or loan interest to the bank. So that is what covered under EBIT. Now, from this you will get 5 lakhs. Yes. After this, you will subtract your interest part. From this pure earning, from your operating earning, you will now reduce your interest part. Now, how to reduce this interest part? For that, you need to read this line, that it has borrowed 8 lakhs at the rate 10% per annum, and its equity share capital is 10 lakhs, that is 100 each. So what is the borrowed amount? That is 8 lakhs at the rate 10% per annum. So here you will be taking 80,000. Now how I got this 80,000? This is the principal amount. If you multiply 10%, means 8 lakhs into 10%, this is what? This is 80,000. So your interest amount is equal to 80,000, and this will give you earning before tax. Now you need to remove I, because already that amount you have subtracted here. So remaining amount is before paying tax. So this is 5 lakhs minus 80,000, 4,20,000. Okay, and then what they're saying, okay, so here you have tax rate also. So for calculation of this part, earning per share, you need to pay tax also. See, government will take their part, of course. So in this case, what is the rate? That is 35%. 4,20,000 into 35%. This is 1,47,000. So this is your 4,20,000 minus 147, 2,73,000, and this is your earning available to equity shareholders. Equity shareholders means they are owners of your company. So how much profit is available for them? That is 2,73,000. Now in this you will divide with number of shares. But they are saying that you have equity share capital, that is 10 lakhs, and each share is for rupees 100. So how to calculate number of shares? For number of shares, you will take total equity capital divided by, you will use each share price. So total equity capital, that is 10 lakhs, divided by each share, that is for rupees 100. So how many number of shares you have? That is 10 lakhs divided by 100. So this is 10,000 shares. Yes. And after this, earning available to equity shareholders, you will divide this value with 10,000, and this will give you earning per share. So let me write it here clearly. For DFL, you will use this formula, that is EBIT divided by earning before tax. And for earning per share, you will use earning available to equity shareholders divided by number of equity shares. Okay. So now you have every data. So just use this data in this formula. So EBIT is equal to your 5 lakhs divided by EBT, that is 4,20,000. So 5 lakhs divided by 4,20,000, this will give you 1.19. Yes, and if you divide your earning available, that is 2,73,000 divided by number of shares, that is 10,000. So what is your earning? 273 divided by 10,000. This is your rupees 27.3 per share. Right now you might find this question very lengthy, but see, in exam you won't be writing each and every step. No? You won't be writing this formula, then this explanation. Right now I'm explaining to you. That's why I'm giving much time. Okay? So please practice it again if you are not able to do it, because in exam you will be finding MCQs or direct questions based on your numerical. Okay, without option, nothing, direct questions, and you need to calculate it. So your answer is 1.19 for the first part, and for the EPS that is 27.3. Okay. Now coming to next question, everyone. Now this is based on your case study pattern. So here you have Global Trust Bank, a large and complex banking institution, is facing challenges with inconsistent loan appraisal standards across its diverse regional branches, now leading to varying levels of risk exposure. To address this, the bank's management wants to introduce specialized expertise for credit risk assessment and product development without undermining the traditional authority of its branch managers. Now, who are responsible for overall branch profitability and operations? So, the goal is to maintain clear accountability within the existing hierarchical structure while infusing specialized guidance. So, this question is based on your case study pattern. Now the question is, now which of the following would be the most appropriate organizational approach for Global Trust Bank to address its challenge? So based on this paragraph, now you need to solve this particular question. A. Establish a central credit risk oversight department staff function that has direct command authority to approve or reject all loan applications, effectively bypassing branch managers. B. Appoint dedicated credit analyst and product development specialist staff personnel at the head office or regional levels, whose primary role is to advise and provide expert guidance to branch managers on loan appraisal and new product features, with branch managers retaining final approval and operational command. Or C. Decentralize all loan approval and product development decisions entirely to individual loan officers within each branch, removing the need for any oversight or specialist input. Or D. Convert all branch managers' positions into purely advisory roles and with a new central operations committee, taking direct command and control of all branches' activities, including credit and product development. Yes. So, what do you think? If you want case study part, you can see this and what do you think, which is going to be your correct answer? Yes. Can you identify which topic they're asking, which question they are asking from which particular area? Because this is a pure theory question, है ना? Now, so as per this scenario, if you see the established central credit risk oversight department staff that has a direct command authority, no. Okay. Appoint dedicated credit analyst and product development specialists staff personnel at the head office and regional levels whose primary role is to advise and provide expert guidance to branch managers on loan approval, appraisal and new product features with branch managers, and finally they will use their final approval and operational command. So this is how they can find out this challenges as a you can say in a benefit side. Okay. So correct answer is going to be answer B. Answer is not going to be a C or D. Next. The organization manual is typically broken down into which of the following 4 sections. Now, for remembering this particular thing, we made one mnemonics that organizational manual is related to poor. Yes, poor. A. Policy manual, training manual, financial and employee handbook. B. Operational manual, marketing manual, IT, legal compliance. C. Policy, operational, organizational, rules and regulations. D. Strategic manual, tactical, procedural or administrative manual. So if you can recall this point, organizational manual is very poor. So here in the first point they're talking about policy manual, but there is no such term related to T or financial manual. So answer is not your A. Then next, strategic, tactical or procedural? No. Operational, marketing, IT, legal? No. Correct answer is your policy manual, in which you will write all your rules, regulations, what are the policies of the company will be taking, management takes that. Operational manual, each department, how they are doing their operations, yes, and then organizational, about the departments, how they are interacting with each other, about the command, that is, and rules and regulations manual. So correct answer is your answer C. Yes, direct question based on your theory part. This question is from your module A. So there are four manuals: policy, operational, organizational and rules, and regulations manual. Now next question. What does the acronym BARS stand for in the field of human resources and performance management? Now in exam they are asking full forms also, so you need to practice this. And what is the full form of BARS? A. Basic assessment and review system. B. Behaviorally aligned rating system. C. Behaviorally anchored rating scales. Or D. Business appraisal and reporting standards. Now this is your direct question and correct answer is behaviorally anchored rating scales. Yes, so correct answer is going to be your answer C. Next. Pluto Bank, a rapidly growing digital first financial institution, prides itself on its agile work environment. Employees are consistently encouraged to challenge existing process, propose unconventional solutions, and are often given autonomy to lead experimental projects aimed at developing disruptive financial products. Now the CEO frequently praises intelligent failures, yes, as learning opportunity, and performance evaluations heavily weight on an individual's ability to innovate and adapt to rapid market changes. Now, while profitability is important, the primary focus is on staying ahead through continuous inventions. So, now you have four options: A. Clan culture, advocacy culture, market or hierarchy culture. Yes. So when you evaluate about different cultures in your organization, you have clan culture, advocacy, market and hierarchy. So if you see clan culture, this talks about your family culture, okay, where everyone is considered as your family member, yes, and they all are following their traditional methods. So that is about your clan culture. Then advocacy culture means here you are following risk-taking businesses. You are ready to take risk. You are ready to do innovations. Like if you see startup companies, they are ready to take risk. They are ready to do some innovative thing, some out of the box thing. So that is what advocacy culture. Then market culture, based on your profitability, based on market demand, you are going with this. Okay, you are following that trend in your organization. Then hierarchy culture, like in your bank, you have hierarchy. Yes, you have junior level, then you have scale 1, scale 2, scale 3, and so on. So that is what hierarchy culture, like you are following in bank. So as per this 4 culture, what do you think which is the culture they are discussing here? So there is one bank known as Pluto Bank, okay, and they are pride on taking, work environment, digital first institution. This is what they are growing, and employees are ready to take, they are encouraged to go for the challenging works, or even if they fail, they are getting appraisal for it. But yes, at least we have tried. Means they are ready to take risk. From this intelligent failures, they are getting praises, means they are ready to take risk. And while if you see the last line that, learning opportunities, performance evaluations, heavily weight on individual's ability, they are also focusing on innovate and ready to take rapid changes. They are adopting rapid changes, what is required right now in the market. And yes, so basically this few terms, that is invention, failures, encouragement, innovate, yes, this is totally your advocacy culture. Correct answer is going to be advocacy culture, because here they are ready to take risk, ready to adopt new cultures, they are ready to take, go for innovative things. So correct answer is answer B. So here is a description of your types of organizational culture that we discussed just now. So you can pause this session if you are watching in recording format, or if you are watching right now. If you want to read, you can read this one. Next. Now again, this is your numerical question. Now they are asking, given for a project, annual cash inflow, that is 1,20,000, useful life, they are saying 5 years, and payback period, that is 3.5 years. And what you need to calculate? Cost of the project. Okay. Now what is payback period method? When we started this session, we solved one question based on ARR. Remember? And this ARR is covered under your non-discounted cash flow methods. So first is your ARR, and next is your payback period method. The payback period method tells you that in how many years you can recover your invested amount. Okay, that is what covered under your payback period method. Suppose if I am purchasing, let's say 10 lakh, by using 10 lakhs, I am purchasing, let's say, one car. Okay, and I am going to use this car for rental purpose, and yearly I am going to earn 2 lakhs. So in how many years I can recover my purchased amount? That is going to be in 5 years. Means if I am purchasing 25, this is 26, 27, 28, this is 29, and let's say 30. Okay, so if here I am purchasing for rupees 10 lakhs, in next 1 year I am going to earn 2 lakhs, then 2 lakhs, then 2 lakhs, then 2 lakhs, then 2 lakhs. So in how many years I can recover this amount? 1, 2, 3, 4, 5. Yes, so what is payback period method? Or what is payback period of this particular example? 5 years. Same logic we need to apply here. Okay. But they are not asking about payback calculation, they are asking about cost of the project calculation. So what is the formula for it? See, formula for your payback period method is equal to your total invested amount divided by your annual cash flow. Yes. So you have your payback period, and what you need to calculate here? Cost of the project, that is your total invested amount. So what is your payback year? 3.5. X is required, divided by annual cash flow, that is 1,20,000. So if you do here cross multiplication, this will give you 1,20,000 into 3.5. This is 4,20,000. So which is your option? Your option is answer B. Yes? Okay, so this is how you're going to calculate, and for this your correct answer is going to be answer B. Yes. Coming to now next question. Here it is, B. Next. Okay. Again we have one numerical question. So let's solve it. A firm has sales of 10 lakh rupees, variable cost of 7 lakh and fixed cost of 2 lakh, debt of 5 lakh at 10% rate of return interest, and what are the operating, financial and combined leverage? In your May 25, in third shift, they asked all these three things based on your leverage. So what things you need to calculate? You need to calculate here operating. Okay, then you have financial, and then finally you need to calculate combined. Okay, so operating, that is equal to your contribution divided by EBIT. Financial, that is your EBIT divided by EBT. And combine is equal to, let me write this combined part here. Combined is equal to operating into financial. Okay, but directly you cannot see contribution, EBIT. How to calculate contribution? That is your sales minus variable cost. If you subtract sales minus variable cost, you will get contribution. Yes? From this contribution, if you subtract fixed cost, this will give you EBIT. Now, what is EBIT? Already we discussed. From this EBIT, if you subtract interest, you will get EBT. Yes? So, what is the sales amount? 10 lakhs. Variable cost, that is 7 lakhs. So what is your contribution? 10 lakhs minus 7 lakhs, this is going to be your 3 lakhs. Okay, and the fixed cost, that is 2 lakhs. So this is going to be your 1 lakh EBIT. Now, debt means your borrowing. Okay, this is your borrowing amount, or you can say this is your loan amount. And what is the loan amount? That is 5 lakhs. But in this particular income statement, you are going to subtract only interest amount. And what is your interest amount? That is 10% of interest. So how to calculate this? 5 lakhs into 10%. So this is 50,000. EBT, that is 50,000. Correct. So contribution is equal to 3 lakhs divided by your EBIT, that is 1 lakh. So this is your 3. Then EBIT, that is 1 lakhs divided by 50,000. This is 2. So if you just multiply operating into financial, this is going to be your combined. So operating is your 3, financial is your 2, and combined is equal to 6. So this is your answer. Okay, so 3, 2 and 6. And remember, today when I'm starting your demo class, okay, for your this December 25, in that first I'm going to cover this leverage unit only. So we will be solving more questions in that, and do join that session at 7:30 p.m. Means after 30 minutes we will be starting that session. So today I will be covering your leverage unit. So do join it and practice that session. Chaliye. Now coming to next question. Mr. Raj, a veteran branch manager at Heritage Bank, is known not only for his formal position but also because junior officers often aspire to emulate his calm demeanor, ethical conduct, long-standing reputation, fairness, handling both customer grievances, internal team conflicts. Now, many new recruits look up to him, seek his informal advice, strive to adopt his professional habits even when he doesn't issue direct orders. Now the question is, again this question is based on your case study pattern. Now question is, while Mr. Raj undoubtedly possesses legitimate authority by virtue of his position, which additional type of authority he is primarily demonstrating through the junior officers? And options are coerciveness, rewarding, expertise, or referent. See, now when you talk about different types of leadership, yes, or different types of authority, in that if you talk about coerciveness, so why someone will follow you? Because of fear. Okay, because of fear, because of punishment, your juniors are following you. But here, they're not talking about any punishment, fear. So this is not your answer. Rewarding authority means because of incentive, bonus, yes, some cash rewards. So because of this, they are listening to you. And here, they're not talking about any kind of monetary benefits. This is not your answer. Now, expertise, because of their degree, because of their knowledge, because of their experience, you are listening to them. So that is expertise. But they are not talking about any expertise. Yes. Last is referent authority. Referent means when you consider that particular person as your role model. Okay. So here, the correct answer is going to be referent authority. Juniors considered Mr. Raj as their role model. So correct answer is answer D. Yes. Now, next question. According to the NPV, net present value decision rule, a project should generally be accepted if NPV is exactly 0, NPV is positive, NPV is negative, or a cash inflows equal its initial investment. So in which condition we need to go for your NPV? Yes. So when we talk about NPV, this is your sum of present value of future cash flows minus your initial investment. I hope you can recall this formula. Okay. Now, as per this formula, sum of present value of future cash flows means if you are investing today 1 lakhs, and how much you are generating because of this 1 lakh, let's say 1,50,000. So this 50,000 is going to be your NPV. So this 50,000 is your positive NPV. Suppose if you invested 1 lakh rupees, but you incurred only 70,000. So this is going to be 30,000 and negative NPV. Ultimately, you are in loss, no? If you are seeing this part, this is your loss. This is your benefit. Yes or no? You are investing 1 lakh, but you are generating only 70,000. 30,000 is your loss. So we will never accept this project. Yes. NPV, if it is exactly 0, we will not take that. Negative, no. Cash inflows equal to its initial investment, no. Correct answer is NPV is positive. Yes, correct answer is your answer B. Yes, correct, sir. This is your B. So, here's your theory related to NPV also. If you want to read, you can read this theory. And let's see your next question. What does the acronym PASTEL stand for in the context of business and environmental analysis? You have 4 options, and this type of questions they are asking in exam. Okay, so make sure you are revising your full forms of each and every acronym given in your book. So, which is the correct option here? A. Political, economic, social, technological, legal, environmental. B. Political, economic, social, target, logistics or ethics. Or C. Political, economic, strategy, taxation, leadership, employees. D. Political, environment, systems, technological or law or ecology. So, if you see PASTEL full form, that is your political, social, economic, no, target is not your answer. Okay. C. Political, economic, strategy is not your answer. Systems, not your answer. Correct answer is your answer A. Yes, here your correct answer is your answer A. Yes, correct. So, with this, let's wind up this session, because from after 10 minutes, that is from 7:30 onwards, you have your first demo session, and in that today I will be covering your leverage unit. So do join it, because in that we will be discussing your theory part and numerical part. Okay, so this is all about your module A and B revision. So do revise it if you are watching live, if you are watching in a recorded format, and you can download this PDF also through our virtual library. Link will be available in your description box, so that if you want to do your self revision, or after this session if you want to go again with any questions, you can go, solve with that. Yes, so thank you everyone for joining. Take care and bye bye.